All right. Thank you. For the perfect time to present. This is actually the time of the day where everyone is sleepy. And so the challenge is how to keep the audience awake. And with this, lighting that's so conducive to sleeping, my fear is that I may end up, with all of you guys sleeping. So I might as well do a good job in this presentation. Okay, so when we got the invite from Steve to participate in this meeting, we immediately said yes, we wanted to participate. And we all know that Kenya is like the face of, or the poster boy of mobile payments in the world, right? With M-Pesa. So it's like the holy grail of mobile payments, of mobile money. So what a perfect time to go to Nairobi. And it's my first time to be here from the Philippines, which is like the other side of the world. Okay, so just to give a brief background, mobile payment actually started in the Philippines. I don't know if the Kenyans would react to that. Way back in 2000, we first introduced smart money. Before I go to my presentation, we introduced smart money in the Philippines. The first mobile payment service but was implemented. It was a telco product, but was backed by a bank. So it was connected to a bank. So it was like a US, not a USSD. It's a mobile banking application that was connected to a prepaid account that was issued by a commercial bank. And it was recognized actually by the GSMA as the birth of mobile money in the world. In 2004, it was followed by GCash, the first purely virtual electronic money product to be issued. And it was a telco-led implementation, very much the same as Safaricom's M-Pesa. And this is also well documented in 2004. In fact, sometime 2005 or 6, I think the Kenyans visited the Philippines to study the two models. And yeah, we're like good brothers with Kenya. But Kenya was very successful. In fact, about 80% of the Kenyan GDP was went through M-Pesa. But to give you the good news, it took us about 18 years to gain traction. And now our mobile payments in the Philippines is leading the way in terms of digital payments, with GCash and Maya essentially accounting for about more than 100 million users in the Philippines. It's like the Philippine population, with GCash alone processing something like $120 billion in transaction value last year. Oh, no, that was 2022. So it's yeah. And today in the Philippines, you don't say pay, you say GCash. So it's now a verb. Anyway, let me go to my presentation. Okay, so Higala Technology Inc. is a US-based company. It was incorporated in the US, and it's actually a joint venture between Chemonics International and Talino Venture Studios. Chemonics International is a leading global sustainable development firm, and we're transforming, I myself is from Chemonics, by the way. We're transforming life-changing ideas into world-changing innovations. We operate in about 100 countries, and we work across economic growth and trade, natural resource management, food security, health, agriculture, and other spaces with focus on inclusion. In the Philippines, Chemonics has had a key role in shifting from a cash-heavy society into a cash-light society. In fact, it was the Chemonics implemented project that was funded by the USAID that introduced the National Retail Payment System Policy Framework, or the policy that governs digital payments in the Philippines. We brought Through Chemonics, we've implemented the NRPS. Through Chemonics, we have facilitated the enactment of the National Payment Systems Act. Through Chemonics, we put up an industry-led payments council that was designated by the central bank as the oversight for payments, self-regulation in the Philippines. We set up two payment rails, national payment rails. The first one is InstaPay, the real-time payments, and the other one was PesoNet, or the batch high-value payments for business. On the other hand, Talino is focused on incubating inclusive technologies that benefits communities, and it has introduced, a number of tech startups in the market. Okay, so the Philippine market Philippine GDP is essentially about 58 billion transactions per year. Roughly, that's about 4.8 billion per month. And if you translate that to dollars, that's about $2.3 trillion in transactions per annum. And by 2022, from 1% in 2023, we were able to drive digital payments from 1% share of payments to about 42% by the end of 2022. And financial inclusion, by less than 20%, we were able to increase it to about 44%, to about 56% by the end of 2022. And we're on our way to a 50% share of digital payments by the end of 2023, when we read the reports soon, and a financial inclusion of around 60 to 70% by the time. No, but there remains, challenges. For example, the real-time payments in the Philippines, InstaPay, of the 2 billion monthly digital payment transactions, InstaPay only contributes about 4%. And a lot of the transactions are closed loop. Most of the transactions are processed, are on net or on us, and processed by the banks internally. And that's because of a number of problems. And while NRPS was able to accelerate the adoption of digital payments in the Philippines, and of course with the pandemic, the acceleration has actually increased, but there remains challenges. And some of the challenges we have enumerated here, one is an inadequate payments infrastructure. When we introduced real-time payments in the Philippines in 2017, we've only introduced like 2 use cases, and that's P2P and P2M through QRPH. But bulk of the transactions are still P2P with very few P2M. And the infrastructure was kind of slow in terms of introducing innovative use cases like bills payments, other merchant payments, or online payments for example, for e-commerce. So that's the legacy switches in the Philippines were very slow to adopt those new use cases. Another issue is switching fee. A while ago, I think there was a discussion about the meaning of inclusive instant payment systems, and I think low cost should be one of those if you want to define inclusive payment systems. In the Philippines, we have the most expensive switching fee in Southeast Asia at about 3 pesos. And the industry is still pushing to move it up to about 5 pesos, or a five-fold increase since it was introduced in 2017. Not only that, the onboarding cost is also very expensive because InstaPay is dominated by the large banks. It's very difficult for the smaller banks to participate. I'll give you an example. In the Philippines, we have, forget about the large banks. We have about 50 thrift banks in the country, and only about 20 of them are participating in InstaPay. We have 430 rural banks in the Philippines, and only 18 of them participate in InstaPay. Another issue is unserved market. Aside from of course, Most of the FSPs in the Philippines focus on the bank and the unbanked. That's where, because if you want to do transactions, if you want to gain transactions and transaction volume, then you focus on those that are currently banked or underbanked. But we have a big part of the population, especially not only the consumers but also on the MSME side, that is technically unbanked. No merchant services or limited merchant services. That's one. That's one of an area. That's an area where merchants in the Philippines don't use a merchant account. They use a personal account to be able to accept merchant payments because of a lack of merchant services. So these are the problems that has prompted us to introduce Higala. Let me skip one slide and move to this other slide. So using an open payments platform powered by Modulup as the heart of this platform to be able to switch payment transactions, we're saying we want to lower the on-ramp barrier to broaden the reach of financial institutions. So by taking away the barrier to on-ramp or to onboard financial institutions, we think we can broaden the reach of financial institutions and compete with the big players. And who are these financial institutions? We're talking about rural banks who are present in the rural areas. Second, we want to lower the switching cost. Of course, if you have a high switching cost, then the tendency for the providers is to price their services at a higher price. And if you're pricing it at a higher price, technically you're discriminating the unbanked or the poor. You're discriminating the micro enterprises. So we want to make sure that our switching cost is very low to attract more users into the platform. We also want to modernize the capability of the platform to support merchant services, innovative payment schemes, and cross-border payments. Okay, so through an open payments platform, we want to connect the large banks or even the smaller banks to a new set of players or ecosystem players that would make payments that can make payments or payment services that are needed by, or develop payment services or introduce payment services that are needed by customers. An example of that are like the neobanks who don't have channels, who don't have brick and mortar channels, to be able to offer like cash in, cash out services or deposit and withdrawal services to their clients through an open payments platform. To enable fintechs to offer payment services to their clients, like for example, the likes of Stripe, like or the equivalent of Apple Pay, and Bayani Pay. Bayani Pay is also part of the Talino Venture Studios. We want to support embedded banking by empowering merchants to offer payment services that are convenient for their customers. And so through this open payments platform, we hope that the PISPs or the payment initiation service providers can collaborate with the traditional banks who can provide the stability and the integrity of the payment networks to make digital payments more accessible to everyone. Yeah, so Higala is an open payments platform empowering traditional financial institutions to move money and connect new market players in the digital economy. So at the heart of the technology is the payment hub that's an open source, that's Modulup, that will enable us to switch payments from one financial institution to another financial institution. So leveraging the financial strength of the large banks, partner unibanks, as well as thrift and rural banks, and connect them to PISPs, or the payment initiation service providers, and be able to provide customized services to customers. Yeah, so we want to build an ecosystem, a payment ecosystem that that's comprised of universal banks, of the large banks, that includes rural and thrift banks that can connect to ATMs and point of sale terminals. Not included here is cash in, cash out agent banking. We also want to to connect to agent banking networks. If you're after financial inclusion, then you should have, cash in, cash out, because that's the only way you can get the unbanked to put their money into the payment system. And so we're using Moduloop to power this, Higala Open Payments platform that's also fully compliant to ISO 222 from the get-go. Okay, so as a way to enter the market in the Philippines, we know that under the National Retail Payment System Policy Framework, the rule says that there can only be one clearing switch operator in every automated clearing house, or ACH. So in our case, we were allowed by the central bank to operate as an affiliate switch of InstaPay. So technically, we're going to offer our services as an expansion of BancNet's InstaPay. So BancNet is the clearing switch operator of InstaPay today, and through Higala, we are offering ourselves as an alternative, especially for financial institutions that cannot afford to participate in InstaPay through BancNet by connecting to Higala. And the minimum requirement that was given to us by the central bank was to enable connectivity between Higala and BancNet, so that transactions originating from BancNet can actually be completed that can go through Higala, or a Higala initiated transaction can go through BancNet. And through the Higala payment network, we intend through an open payments infrastructure to connect the merchants, the microfinance institutions, the fintech, and the e-commerce marketplace operators to enable their customers to use convenient and seamless payment services. So our market entry is as an affiliate switch network. So we already have a pending application with the central bank to issue us a license as an affiliate switch network. And we're now working with BancNet to enable the interoperability, meaning the connection between Higala, our switch, and the BancNet switch. And we're about to launch our service on the 25th of April, and that's next month. So in a month's time, exactly 30 days from now, we'll be launching the first Moduloop implementation in Southeast Asia. Yeah, so we are actually inspired by the UPI of India, by the Zelle of the United States, Pix of Brazil, and we're hoping that the Philippines can be the next, in one of these, more successful payment networks. Yeah. With that, I'd like to thank you guys for listening and not falling asleep.